Well, I'm recording, Billy, so pipe down. No, I'm kidding. You're good. All right.
The hell out of here with that, Jay.
Cool. So
Go ahead.
let me share my screen, guys. I feel like I'm at work when I say this shit. Can everyone see my screen? Cool. Is it clear?
Yep.
Yeah.
All right. So as you know, we've been kind of doing a foundational course for technical analysis, and this is super important because it's about market trends and the VIX. More important than anything is trends in the market. So something Brett and I talked about on our first live was the trend the market was in, which was a downtrend, and we were looking for a bounce in the overall market, which we called out. I wish we recorded that session, but we didn't. Anyone who's there knows we recall the bounce in the market. So it's super important though, because that's all the market comes down to at the end of the day, right? It's identifying trends that are existing and how new trends emerge, right? Hold on, I'm just asking anyone to mute if you're bad background noise. Can y'all mute? Dave, J, laptop, freaking mute, bro. Thanks. All right, cool. All right. So yeah, so it's really important to identify trends in the market because that's all the market comes down to, right? The market's either trending up, trending down, or moving sideways, right? And you don't want to get caught in the middle. That's how you lose money. You want to kind of identify new trends, current trends, and be part of those. So for our agenda for today, we have market trends. What is a trend? HTF means higher time frame versus LTF, lower time frame. Using our EMAs. So our EMA stands for Exponential Moving Average. So we're going to use moving averages in general. We're going to use simple moving average and exponential. I'll explain those to define trend direction. Drawing it using trend lines. Brett is huge on using trend lines, spotting new trends emerging, identifying trend breakdowns, and talk about how we call that bounce. And then we're going to cover the VIX. I don't have to go into every detail over here what it is. All these here. I will cover in detail what the VIX is, how to use it in your trading, so on and so forth. All right. So first thing is, what is a trend? Pretty simple, right? It's a direction the market is headed in, whether you're trading Apple, you're trading the overall index, you're either in an uptrend, a downtrend, like I said, or sideways, right? So some things you want to see in an uptrend is higher highs and higher lows. That's pretty much, you'll see on a higher time frame chart, we'll talk about it. You'll see price making higher highs, higher lows, and you can pretty much just see, like, if you draw a line underneath that the general trend will follow that, right? And that's bullish. Obviously, a downtrend will be bearish. The opposite of that, lower lows, lower highs. And then sideways, price consolidating. There's not really much clear direction. I always say buyers and sellers are in agreement during that time period, because no one's winning, right? In an uptrend, bulls are winning, and a downtrend, bears are winning. And a sideways trend, no one's winning. It's a range bound market, right? Which isn't ideal for anyone really, unless you're trading the range. So one thing that's super important, and we kind of talked about this in our earlier sessions, is higher time frame, HTF versus LTF, lower time frame, and they both matter a lot. So whenever we're starting out with an analysis of a stock, right? So say like Hood, for example, or HIMS that Brett called out, we're looking at a higher time frame. I'm not giving you an analysis of Hood on a 5-minute chart and being like, oh, this 5-minute candle. No, you're looking at a daily, a weekly, or a monthly time frame. You got to start, like I said, from bird's eye view, from a macro time frame, and you work your way lower, right? So you always start higher and work your way lower. And that happens with finding levels, finding trends, whatever it is. And then what you really use your lower time frame for is your entry. So like you'll see, obviously, Billy, if you're trading intraday, he's always on a lower time frame chart, because 1 minute, 5 minute, 15 minute is what he's using for, but he's kind of get an entry on a low time frame chart. If you're looking for a swing play, like say something like Hood, for example, you're going to start on a higher time frame chart. For me, it was daily. And then you find your entry on a 5-minute, 15-minute, 30-minute chart, whatever that is. Anything under a 1-day time frame, usually some range of minutes, right? Any question on that, on what a trend is? Is that pretty clear to you guys?
Clear.
Clear? Awesome.
One of the most common questions I get, at least, is which time frame matters the most. So they both matter.
Mhm.
Like Jay was saying, the higher time frame kind of sets the direction of the stock, the bigger picture. That's what you're gonna definitely want to look at first. And then the lower time frames, if you're looking to get into a stock, right, your entry or your exit, you want to go on your lower time frames and see, oh, okay, this day, what day, if I'm selling today, what is my potential exit or entry on this stock? You know, you're zooming in on the current trend. So when you're first looking, you always want to trade with the trend. The trend is like the house in the casino. So if my higher time frame is in a downtrend, it's checked off my list. Honestly, you know, you could play a bounce. I have no entry on those because, you know, when you're basically fighting the house on that, you know, so you always want to trade with the trend. So I look for a bullish trend, and then the lower time frame, looking for my exact entry on the stock.
Yep, exactly. So we'll show some examples too when we pull up some charts. I'll go through some charts that I saw over the last 2 weeks, some that Brett saw, and we'll talk about from a high time frame what we were seeing, and then how we would go about it, how we went about an entry, or if we didn't take the trade, how we would have went about an entry on a lower time frame. All right. A big part of trend too is using moving averages to identify a trend, right? So you guys remember that first session I was talking about the 21 EMA being the mean. So I'm a big fan of the 21 EMA, if you guys couldn't tell, and the 80 EMA. So the lower time frame EMAs are pretty much going to track trend on a lower time frame, if that makes sense, right? So your EMAs, I would think of it this way. It's pretty much calculating the average price over a certain amount of candles, right? So the 21 obviously is more days than 8 days. So that time, that trend, sorry, that EMA might be a little further from price generally, right? And the 80 EMA usually is closer to price, and use that to track the trend. I'll show you an example on the chart. But the further out you go number wise, the further away the EMA is going to be from the candles. And I'll show you an example. So the 50 SMA is really, and the 200 SMA are two huge macro trends or moving averages to use. You hear people say like, "Oh, we bounced the 50-day. Oh, it's under the 200-day. It's bearish. Oh, we're reclaimed the 50-day. We're bullish again." Or you hear people say, "Oh, we crossed the 50 cross over the 200. That's a golden cross. 50 cross under the 200. That's a death cross." So you hear those terms thrown around a lot, and I'll show you guys some examples here too. Let's get a chart up. Let's stop this share here. Stop this share. All right. So, Brett, what do you think we should start with? QQQ?
Yeah, you can do that,
Yeah. All right. So let's
or even
do,
AMD, like something that's hot right now.
Let's do AMD. I'm good with that. All right. All right. So AMD is right here. So key for me on these is like for when you're trading a higher time frame. So say big, especially with someone like Brett, how he trades. Like for me, a lot of times I'll just have the 8 and the 21 EMA in my chart because I'm looking for like a crossover from the 80 EMA over the mean here, or I'm looking for a bounce on the 80 EMA. Like I said, the lower time frame trend line, the lower time frame moving averages, like this blue line here, are going to be closer to the chart. This is an 80 EMA, so it's calculated over a price of 8 days, right? This is a 21 EMA. It's calculated over a price of 21 days. So obviously it's much closer to the candles than you have. I'll put these two back here. This is the 200, right? The 200-day is a lot further away. It's calculated over a price of 200 days, right? And the same for the 50-day. It's going to be further away, right? So,
And guys, look at how the shorter time framed moving averages are stacking above. As you go longer dated, they're all stacking upwards. See, every time it does it. Look at every time. Look at the moves on every. Well, Jay, show them every time it moves on the.
So pretty much what Brett's kind of is showing you is like how they're stacking. Like, look, let me use a cursor or this little ellipse here to show you better. Like, say, for example, here, like you see how these are converging up, right? You want to see like, all right, so an example here, when we were in a downtrend, like the price was negative here, these are converging down. You have the 50-day moving lower, the 200's under the 50-day here like this. It's crossing under each other. This is like a negative stack of EMAs, right? When price is trending higher, you'll have a positive stack where they're stacked on top of each other, like Brett was saying, by, you see like the 8s here, the 21, your 50, and your 200 here, right? But back here, you have a negative stack. Does that make sense to you guys?
And guys, when they look tangled, look at every time it gets tangled. It's chops, the stock chops. So it gives you the general direction of where the stock's going.
Yeah. I would look at it this way, right, guys? If you're swing trading or buying stocks, you could just get away with the 50 and 200 day, right? And that's an SMA. The SMA is a simple moving average. It takes the last close, adds them up, and pretty much that's based off the amount of days you have involved for your SMA. So they're slower, they're less reactive, they're a little smoother.
And call me crazy, dude. I use the 21, the 50, and the 200 SMAs, bro. That's how I trade, and I'm successful.
We literally have the same stack because I have the 21, 8, 50, and 200. And it's super helpful, like Brett said, because Brett, you're using the 8 for your lower time frame trends. If you're trying to like say, I'll give you guys an example, right? Say you want to day trade AMD, right? Say you want to day trade AMD this week. You're like, you know what? Here's the 8 EMA, which is a lower time frame EMA. Remember, it's the EMAs are going to be different than the SMAs because it's pretty much based more off of recent action, right? So prices hugs a little closer to it, like you can see here, right? So you can use it as a day trade idea that, all right, I know even for this week, or maybe not this week, but tomorrow's Friday, say next week, you know what? AMD's been super strong. If we get a dip at the daily 8 EMA, I might get to buy it there. So you're looking at that on my bad. I'm on a weekly chart. I'm an idiot. Here we go. Same thing. We're on a daily here, right? So you see, if we pull back here to 249, you see the blue marker here. That's showing you where the daily 8 EMA is at. You can use that as a long entry because we've been trending up over the daily 8 EMA a short time, right? And we're kind of floating above it. Brett, correct me if I'm wrong. If this pulled back here, that's a great dip buy for a scalp.
Absolutely. Just at least for a bounce, yeah.
Yes, exactly. For a bounce trade, a short-term bounce trade, amazing. For a long-term trade, something like the 50 or the 200-day, look at it. It's like a freaking brick wall. Every time
it's a guarantee. I can say it's almost a guarantee.
Look how it's holding. And that's part of trends in the market too, right? Like AMD, I used to hate trading AMD. AMD used to be a shitty stock, in my opinion. Brett, let me know if you think differently. Like maybe two, 3 years ago.
I mean, it was definitely slumping for a while.
It always was slumping. And look, back like in 2022, when I first started trading, look how long it was under the 200-day EMA for. Like every time I had a rally, look, it broke back down. It couldn't even get over daily EMA. It was a pretty shitty stock. It was down
I was buying a lot of that under $100 just because I saw NVIDIA's market cap and I was seeing how AMD was lagging to NVIDIA's market cap,
And that was a fundamental play to you too, for a fundamental.
Yeah, exactly.
But if we're talking pure technicals, under the 200-day moving average is pretty bearish, and that's what we're talking about trend-wise, right? So AMD never got over that. But look, once AMD made a firm reclaim over the 200 MA moving average, 200-day moving average, look how strong it's been moving. And once it reclaimed it, anytime it's tested it, it's a pretty damn good bounce, or you get a quick reclaim of it, right? And my point in calling this out is these higher time frame moving averages. If you want to make $1 million in a year, in a quarter, like Brett, I think you keep your trading strategy pretty simple. You're buying around these areas here. If you see a breakdown here, you wait for a reclaim. You're buying it again. Like
that's all I do, straight up.
Yeah,
that's my bread and butter.
And that's why
I buy the dips.
No, I was saying when people say, "Oh, it's not about time. It's not about timing the market. It's about timing the market." I couldn't disagree with that anymore because, realistically speaking, if you're a long-term investor, you don't want to day trade. Say you just want to buy stocks and swing them out and hold them and make money. Set an alert at the 200 AMA. Set an alert at the 50-day and the 200-day, and you'll make money every time.
And don't buy the FOMO. Look at every time. No matter what, it's always going to eventually retrace to that moving average. I'm telling you, you guys might think it'll always eventually never go back down there, but it will eventually. I promise you. You'll always get an opportunity. You don't want to be chasing because you're going to bag hold something and lose all that time opportunity to make money elsewhere. So
100%. So just a quick recap for you guys. I know we both probably covered a lot. So I'll look at it this way. These are the 4 I use. I use the 8, the 21, the 50, and the 200, right? But most of the time, I really am going to have the 8 and 21 on my chart for like some shorter term plays, like say something like Hood I'm giving you guys that moves pretty quick. But I'll think of it this way if I had to break it down. Like the 8, I would say, is our fastest line of the chart. It's going to be moving as close to the candles as possible, right? That's like your pulse check, I would say. If we have a strong trending market and price pulls back to one of these, this is a great bounce opportunity to take a scalp off for a day trade or maybe a short-term swing trade. Say you buy a dip here at the 8, you swing it out for 2 days. This is really your short-term move, right? And also, too, I would say that if price breaks this quickly, you could tell this is your first sign that short-term momentum is fading, right? And then your second confirmation is going to be the 21 EMA. Obviously, it's right in between 8 days and 50 days, so it's kind of a mid-time frame point. So when you have the 8 over the 21, that's a great bullish confirmation. If this price crosses back under the 8 here and bounces at the 21, that's your mean reversion, a spot to buy again at. But if it breaks under this, that's your early warning signal that, okay, trend is really changing here, And if you have price converge under, meaning these EMAs cross, instead of crossing over, they cross under, that's another warning signal. Look what happens when it happened before. It's a short-term moving average, but when the 8 cross under the 21 EMA, look, this is pretty bearish action right here, And this is what I'm talking about. Like, it bounced the 8 first, it tried to reclaim it, rejected it. This is just also one other thing. When price is kind of trading in between close like 2 EMAs like this, it's going to be tough to trade. Like price is really compressing and like there's not going to be much room to make. Like look what happens when you get that,
It's
you
chop.
don't want to. Yep, exactly.
Yep. Just like I said, when they get tangled, it's all chop.
Like look at this right here, pure chop. Like what can you do here? Nothing. Leave it alone. Don't touch it.
Yeah. But then again, when you see those crossovers on the lower time frame moving averages, you get explosive movement. You want to buy on the start of the crossover. You don't want to be like right now, AMD. Look at where it's at right now. I wouldn't, if you don't have a position AMD, I would not be touching that thing.
Don't touch it.
Yeah.
I wouldn't day trade nothing, scalp nothing.
It's all about timing in this market, guys. You don't want to be chasing shit. No. AMD will come down. I promise to you. I promise it will.
It might not be tomorrow, might not be next week, but it's going to come down and we'll be here waiting for it, But like Brett was saying, when those so like Brett said, you want to be buying when it crosses up. When it crosses down, that's your sign to be like, okay, let me chill out for a second and see what it does here, Because look, once it crossed under the 8 crossed under the 21 over here, let me zoom in a little more so you could see that better. Like price didn't really do that much here. It retraced here, right? Came back down. It then tested a 50-day. Like this is not the area you want to be trading in, really, But when it crossed back over, you could have bought here and made a clean day trade here and ran this back up to 267, 270 or whatever, So I would really say use the lower time frame EMAs as like your warning signals or like your quick plays. And I would think of the 50 as like your medium term trend, right? And your 200, this is like the holy grail right here, right? This is your macro trend line, right? If this breaks, we're in big trouble. If this holds, you got some big money to make, So I would say the general rule of thumb is if you're over the 50 and 200, you're bullish. Over the 8, if you're over all 4, you're super bullish. If you're under the 8 and 21 maybe, but over the 50 and 200, midterm bearish, price needs to figure out where it's going. So just remember, it's in the order of the number in front, so that the 8, it's just a number of days. So smaller days means close to candles, shorter time frame reactions off of it. So I'm going to pause for a second. Anyone have any questions? Because this is super important, guys. Like for anyone, even if you're buying shares in your IRA, you want to be using these, That's what I would say for you guys. Anyone have any questions, comments? Oh shoot, 20 people on now. Yeah.
Yo. Can you guys hear me?
Yeah, we can hear you.
Yeah, so for my plays, you're not going to look at like a 200-day moving average or a 50. You could focus really on 21 days for like those quick pre-market scalps. So between that and then VWAP, which obviously we covered in a different lesson, but those are like the key levels you want to look for a bounce. But like the guys have said, you want to use these moving average lines as like kind of like a magnet, right? When that price kind of reverts back to that line, you're gonna wait for a bounce and use it as kind of like a a trend line for you to make those plays. So I know a lot of people play my stuff in the morning, so you're going to use obviously like an 8 or a 21. I like the 21 for like my small cap morning stocks.
Yeah. So to Billy's point, that's why also too in that slide it says you're going to go higher time frame down to lower time frame, right? So when you're playing large caps, especially, you're going to start higher time frame. So let's give you an example. Say AMD, I'm like, you know what? I want to look for a pullback on AMD to the daily 80 EMA here at 249, right? That's be my next long entry. I want to scalp it right here, right? So here's the thing. I'm on a daily chart right now. You cannot get an entry for AMD for your entry. You cannot take an entry for AMD on a daily chart. You can't. That's why you're going to zoom out to your lower time frame, like a 5-minute chart. And what you would do is you would wait till you get down to that 249 level. Keep that level in mind that you have from your higher time frame, right? This 249 level. And you're going to go to your lower time frame and watch for a reaction there. So maybe you go to your 5, your 15, or even a 30-minute chart is fine. Let the 30-minute candle close. Watch for a reaction at that level. You're not going to see that same level on if you're on a 30-minute chart, looking at it, the 80 EMA, it's going to be the 30-minute 80 EMA. It's not going to be the daily one. Does that make sense to you guys? Like every time I change the time frame here, the EMAs are going to adjust to the time frame I'm on. Does that make sense to you guys?
Yep.
Okay.
Yeah, that makes sense.
Yeah.
Got it.
Yeah, great job, Jay. And like for this, you see like sorry to interject. I'm not going to
No,
much
you're
to
good,
speak.
you're good.
I'm just adding a couple points when I can. So you see in this price action that those candlesticks, right? And Jay, can you correct me? What is that yellow line? Is that an EMA line that you?
Yep, that's the 21. That's the mean. Yeah.
All right, so that's a 21 exactly, right? So you see, just starting on the left-hand side of the chart, right? Every time that price kind of drops back down to that yellow line, it kind of just hugs it and then bounces off of that. So you can see in this case, you have a nice uptrend because you have higher highs and higher lows, meaning that every time there's a pullback, right, it makes a higher low. And then when you have that explosion off that moving average line, you're continuing to make higher highs. That's what really like defines a good uptrend, and one that I like to try to look forward to when I'm doing my morning plays. When you have an instance where that yellow trend line, right, if that price falls below that, and what we use is like reclaim or confirmation, all that stuff.
Like right
if your
here.
price, right, if your price fails to reclaim that, so say for instance where Jay's cursor is, if you move to the left, you have that nice to the right, like that one green massive like
Right
hammer
here?
candle.
Oh, the
Yeah,
hammer.
yeah.
Yeah.
So say for instance that price actually rejected at that yellow line and starts trending downwards. That's the start of a downtrend.
And that's a great spot to short too. Like, so when I trade like NQ and I'm scalping moves like that, so the lower time frame EMAs have their purpose as well. Let me just take VWAP off the chart to not confuse you guys. It's about EMAs, not VWAP right now. So I would say I always refer to the 21 EMA as your mean. Like price always reverts back to the mean. Like every EMA serves their purpose. 8 is more for trend. The 21's like your midpoint. Think of it as it's in between the 21 and the 50-day, your most short time moving averages. That's like your midpoint. So that's really like the magnet you're looking for. It kind of acts similar to VWAP sometimes too, where you get those strong pullbacks and bounces off of it. But just remember, on each time frame, it serves a different purpose. And I hope that makes sense to you guys, because time frames are everything in the market. You need higher time frame and you need lower time frame. It's key to know when to use both, right? Or how to use each. Your higher time frame analysis, your macro view, it's going to determine, okay, I will look at it this way. You have a where in the market and a when, right? So your higher time frame is going to determine where you're entering, right? Your lower time frame is going to help you determine when you're entering. Does that make more sense to you guys? Cool. Dave, you're off mute. You have any questions?
Yeah, you got that last like 2-minute sprint actually helped me out a lot, because I was curious on like what you guys see from obviously you got hunches, right? We're human beings, so I get that. but I like the numerical of it where it's like, okay, that yellow line is the mean, right? It's like if LeBron shoots 51, he's not gonna get 50 all the time. He's probably gonna get 27 points. But if he hits 14, he's probably gonna go back to 27. So it's good to have that, like, okay,
that's a great analogy.
8 threes every night. It's gonna come back down.
Exactly.
So I like having that.
Yeah, it's the average. Moving average.
Yeah. Exactly.
And it's like a magnet line. So, right, if you're extending above that and price is going above that moving average line, you're going to have a pullback to retest that moving average. And in this case, when we're looking at AMD here on the larger time frame, you're getting a bounce off that moving average. So, however, when you're trading things on the daily, right, and you're trading my plays, when you start seeing an uptrend start to break down, right? So if you're starting to see that, all right, this is not making a higher high, and you're just getting topped out. In this case, there's actually, it looks like a triple top. But say, for instance, you're on that second double top right there, and you're seeing, exactly. Say your price rejects there, and you start making lower lows, and lower highs. You need to really start thinking about either take profits, or you need to, scale out and see if you can get like another kind of push to the upside.
Yeah. And when you see that trend,
and then you could and you can't really short small caps. There's a few you can, it's not between the floats and institutions own a lot of the float on those too, but that's what you have to look for your take profits, right? When you start seeing that trend, like you could see there's a clear resistance, especially here on AMD, which you're starting to break out, right? But if you see that it's starting to reject, you have to just be quick with this stuff, especially on those like morning plays. There's no more, and you could always just get out. The pattern day trader rule is going to change where you guys can, go in and out of a million things with $1,000. You guys could turn that $1,000 into $100,000. We're going to do it together. I promise you that.
Sorry, Billy. Randall has his hand up.
Yeah. Can you just do me a favor and kind of highlight, based on the EMAs, where is a position where you would actually enter a trade, and where is a position where you wouldn't, and where is a position where you would hold? I guess is what I'm looking for.
That's a great question.
So I was buying AMD at $200. So if you look at the red 200-day moving average, like we said, that's gold, right? That line, that line's usually holding. So my buy was at $200. So when I saw that crossover on that EMA, if you put that right over the cursor right over there, it's right. Yeah, exactly. That's your expansion move,
And here's the crossover he's talking about here, right?
And look how well exactly. And look how well 200 was holding that whole period of time. That's the buyers were stepping in every time it was trying to go under.
So, Randall, one thing too to realize is like the more bounces you get off of a level, maybe it's a support level or a moving average, it's showing you that buyers have intent at that spot. And like we always say, the market has a memory, right? So it's all about statistical probabilities in your side with the market, right? So the likelihood of us bouncing at this level is very high. So you're not going to get many tests this level, but when you do, because it's a 200-day moving average, you want to take your shot there if that's a stock you're looking to play. So I would think that the SMAs, these are the MAs like the 50 and 200, those are your bigger picture, and those are telling you the bigger picture. These smaller time frame ones, those are telling you kind of what's happening right now, short term. Does that help, Randall? So, and also to your question, I think it depends how you're trying to trade this, right? So, Randall, say tomorrow you're like, yo, Jay, I want to get into playing AMD. I would say, all right, AMD is super overextended from the daily 8 EMA. If you're looking to day trade this short term, let's see how the reaction to daily 8 EMA, right? That's really your first stop. You see the stack here, right? It's a positive mean stack here, or a positive EMA stack here. You have the 50 here, the 200 here, the 50, the 21, the 8. So this is extremely bullish alignment. So our first stop down, if we pull back, Randall, is where? The shorter time frame EMA, the 8, right? This blue line here. So I would tell you, you know what, Randall, if you're looking to take a scalp here, wait for a pullback to this daily 8 EMA. Let's see the reaction there. Say we get that on Tuesday, we get a positive reaction. I'm like, all right, let's take a long scalp there. Or say you're like, you know what, Jay, I'm not looking to take a scalp trade. I'm looking to maybe swing trade this. I want to play this over the next few weeks potentially. I'm like, all right, let's watch that reaction at the 8 again. But if this fails, let's really want to target this 229 spot. Like Dave said, this is our mean. So this is telling us what's happened short term. So when AMD is trending strong, it will trend over the 8 and the 21 for a while, you know? Like, look back here. This is from the tariffs, right? Once we got reclaim of the 8 and the 21, this is short term. It trended over for a pretty damn long time. And anytime we got to bounce back to the 21 EMA, bounce, bounce, bounce. Like, it didn't break for a pretty long time. So I would say that could be like your more intermediary golden spot to buy a stock that's in an uptrend, right? Because the chances it gets back to the 200 anytime soon, I mean, maybe, you never know with Trump. But short term, this is the spot you want to look at right now. Does that make sense?
Yeah, that makes sense.
Okay. Yeah. And to break it down one more time, I would say these lower time frame EMAs, the 8 and the 21, are telling you what's happening right now. Short term, what's happening. More like it's 8 and 21. It's based off 8 days and 21 days, right? And then the 50 and 200 are your big picture. Like Brett said, Brett, you were buying AMD at $200.
I posted in the chat. I made
holding.
everyone. I bought a lot of AMD. You know, I told everyone to buy that at 200. It was a guarantee for me. You know, the buyers were stepping in every time.
But the problem is, Brett, you don't get those tests that often. I mean, recently it did happen often. This year is obviously an anomaly with the Iran war and whatever else is going on. But you're not gonna get those tests often. So Brett is playing the odds in his favor that, okay, I might not see the 200-day again for another 6 months. Let me take my chances here. What's the worst that happens? It goes a little lower. AMD is going to get back to the 200-day eventually. And especially, the thing is, if you're an options trader, you can't trade like this necessarily. And that's why Brett loves shares too, because the time's on your side and you're buying at the 200-day, you're good. You're going to make money. That's it. Like, it's simple as that.
And for someone that wants to buy AMD, you know, right now, so overextended, I'm like, even if you're playing short-term scalps on it, why risk reward is just not there?
Yeah,
there's so many
other things to play.
There's so many stocks in the market. You're buying an extended move. I just, you know, you can't just look at one stock. There's so many opportunities out there, you know.
Mm-hmm.
So I would definitely look for a different setup. I wouldn't be buying stuff up elevated like that.
I know we took a lot of time on this, guys, but this is super important to understand these moving averages. And honestly, I didn't add these to my repertoire until pretty recently, like maybe over the last 2 years of really understanding how these work, especially the 8 and 21. Like, and it's a game changer. Like, to get call out plays like Hood and those names like that, like this is what I'm using. So I'll look at Hood really quick. Also, Hood, I literally drew one line and it freaking went crazy. But like, this is a little riskier because now for Hood, say like Dave, I know you bought shares of Hood, right? So now what we were talking about, like those moving averages converging positively. This is why also, let me backtrack really quick, that I said this is a foundational class, because everything you learn, it's like when you build a house, you have your foundation, then whatever else layers next on top, they're all part of like learning how this works. So it's a combination of using support and resistance and any other tools you have. I'm not just using moving averages only. You combine it with a level of support. So you start with, okay, this is literally the one line I drew, right? Hood was having this action under the 21 EMA, kept rejecting. But this is a big previous breakout spot here. I'm like, okay, we have previous resistance here from back in May of 2025. Hood came down here. You see these bounces happening here. It just had some action around this level that I liked. And then it had this one big volume day, but got rejected at the 50-day, right? But it came back down to this level again and retested it. So now what you want to see, that we use our support level to get our entry. Now, if we're combining our moving averages, you're seeing these have this positive conversion over, right? 8's crossing over the 21 and the 50-day. So if anyone wants to answer the question, if Hood's didn't go up higher, where do you think it might reject next? There's no wrong answer. Anyone can answer if you want to.
200.
Okay.
Probably
Yes.
200.
Exactly, Justin. So a great spot. So prices work as magnets too, as they work in downtrends and uptrends too. It's very likely that Hood has enough gas to magnet up to the 200-day here, right? So if you're in Hood like Dave is or anyone else is, the 200-day is up here. That's probably a spot that sellers look to reload short at. But if you have a low entry from here, you don't really care that much, you know? And you have that positive conversion of your, like I said, the 8 and the 21 are telling you what's happening right now. Right now, hood's moving positive. Long term, higher time frame, hood's been in a pretty bad downtrend since December, right?
I was just about to say, if you draw trend lines on this name, this broke out of the downtrend pretty nicely. I mean, there was it was sliced through like butter,
Yeah.
That was very telling for me that this thing was going parabolic,
Yep.
So I wouldn't doubt if this went to 100. Honestly, it could, like I said, it could retest the breakout if we get market weakness, but momentum buyers have all the momentum on this play. This one's going to go higher for sure.
Yeah. And also one other thing too, like you said, still you don't want to chase this because say it does go up to 107. There's a big it's probably gonna get rejected the first time it goes to 107. But look what happened. Like anytime you retest one of these major EMAs, the first time you're gonna get rejected. Very likely. Look what happened when Hood tested the 50-day the first time. Smacked back down, But it came back to this level of support. Buyer stepped in. The PDT news came out. It aligned well. And also, I'm going to say this to you guys. I wouldn't even call that lucky. Like we always say, price precedes news. Like, Brett, you were in AMD last year with that huge rally. Like, you didn't know that news was coming out.
No, yeah. Even when we were calling the stock market crash earlier this year, I knew something was going to happen. I can't tell you the news, the catalyst, but when the charts don't lie. The charts tell before the news. So they don't. Yeah, I would. I don't look at the news honestly. I really don't even pay attention to it.
This is your news right here.
Yeah, exactly.
Telling everything. Cool, Justin. What's up, man?
Hey, Jay. So on this chart, I'm seeing in September and also in late November, the price looks like it dipped below the 8, 21, and the 50.
Hold on one second. September and late November. September right here?
Yeah, right around that region. I can see the price beginning to break through the 8, the 21, and even the 50. It looks like it broke through temporarily.
Yeah.
September and So those 2 points.
So I gotta go to September. Oh, sorry, I'm literally shot. September 1st right here.
Yeah.
Okay. Yeah. So, yep. Gotcha.
So with those 2 points, my question to you is, if you're looking to trade and not just, buy and hold, at what point would you start to seriously think about exiting and waiting for it to make a bounce? Would you exit there in September?
So are you saying if you're already in this position, or if you're already if you're already in a position and it breaks down here? I think 2 things, right? Where's your entry at, right? Because let's look here. Say your entry is from this breakout spot here. You play this flag here and you broke out. You got a really good entry. But say you entered only here, this breakout spot, and you start breaking under the 50-day here, you might have a little concern. But that's why, like I said, this is like one tool in the toolbox, because we're not going to only say, hey, we broke under the 50-day, let's get out. No, let's look at what else is going on here. There's support right here, or even you could say there's support here. So you might say, okay, I have some support at 90. But if you say you come down to 90 and you don't bounce, that's not a good look, because you're under the 50-day. You're losing a key support level here. So you kind of want to combine the tools, if that makes sense, right?
Babe, how was the chicken? Good?
I have to mute you, Chris.
Got it. I understand.
No, all right, yeah. So yeah, I would say also too, at the EMAs, one thing that happens often, and Brett, I know you mentioned this too, you see these failed breakdowns. So sometimes you'll test an EMA, but price is still hugging the EMA kind of. Like the EMAs always act as magnets, and this 50-day is an important one. So look at it bounced, it rejected. Look like it was in a breakdown all day, but reclaimed it eventually. And that's why time frames are super important, because like I said, at each time frame, something's happening on that time frame. So on the daily time frame, this 50-day, it's super important. Like if price is trying to break under this, you don't have confirmation that price is broken under until the day is closed. Does that make sense? So
and then that's when the candlesticks come into play. You use everything to make the trade. Look at the candlestick there. Look.
Yeah.
Buyers took demand. They took control right off that candle.
So if you were trading this intraday, you're like, oh my God, price broke under the 50-day. And you're trading on a 5-minute chart. You're like, oh my God, price broke under whatever was this 103. That's the 50-day. I'm shorting this. you would have got burned so bad because guess what? You're trading a daily EMA on a 5-minute chart, like you need full confirmation. But say you're looking along there and you saw price broke down at that level, like, you know what, let me leave this alone for now. Or take a starter there, like something like that. Then you wait for the next day or the day that close, you see where it ends up and it gap it the next day. But the biggest thing is you have to be mindful of how you're trading the higher time frame EMAs on a lower time frame because the reaction doesn't happen until the full candle closes. That make sense?
Got it. Yeah. And is that a hammer candle, the red one?
Yeah, that is.
Yep.
And that's why we were talking about like candle colors. I think, Brett, you called this out too. It could be a red candle, or Billy, you might have said it. It could be a red candle, but it could still be a hammer candle,
Yeah.
Like you see the strong lower wick. That's what we said too. Like what's happening on the candles, the lower wick being a strong, long lower wick, showing that buyers have
stepped in
intent
and pushed it up, right?
Yeah.
And
exactly.
if you're watching the stock market all day, every day, you'll see the price action on the stock. You'll see the buyers take command. If you're watching tick by tick, you could see, that candle is telling a lot. If you're not watching the stock market every second, then that candle is going to tell you the story.
Yeah.
But if you're watching the stock, I could tell from the level 2, I could tell when buyers are coming in and sweeping out the sellers, So it's how much detail you want to really look at it.
Yeah. Good questions. Good questions. Anyone else have any questions on these EMAs? Like, this is not going away, guys. It's something we revisit. Oh, Colin, what's up, bro?
Hey, what's up, Jay?
What's going on?
Is it possible to go over how to execute on the smaller time frames using
Yeah,
the
absolutely.
EMAs?
Absolutely. So I would say for me, let's
You want to
look
pull
at,
up one of my charts, Jay, from today?
let me pull up SPY for Colin first, because I know he trades SPY.
Okay.
If that's okay with you. And then I will pull up one of yours too. Which one do you want me to pull up of yours, Billy?
Hold on. Trying to see what a good example is.
So Colin, first thing I would say for when you're trading SPY,
Yep.
on a 5-minute, 15-minute, whatever it is, don't use the 50 and 200. That's not going to really help you that much with I'll show you something too. This is going to be a little more advanced for a mean reversion concept. So to complete a mean reversion, these are your outer bands, right? So you have Keltner channels, you have Bollinger bands. Those are a whole nother conversation to have, but you use a rejection of those upper bands to complete the mean reversion, right? If that makes sense.
I'm kind of familiar with Bollinger bands. I don't use
Okay.
it too, but I kind of
Gotcha.
know.
So I use these volatility-based mean reversion bands. These are ATR bands? I think these are ATR bands. I'll message you offline about it to not confuse everyone in the lesson. But
Okay.
this is a tool you use in conjunction to get to the mean reversion itself. But on a lower time frame, say you're trading SPY, I will look at this 2 ways, right? You still could trade the crossovers, right? The crossovers that we spoke about, the 8 crossover 21 is still a positive bullish reaction here, right? You see 8 over 21 here, still positive. You see that crossover there? That's bullish action here, right? When the 8, I think this happened, this was today, right? Yeah, today we had that pullback initially this morning. And honestly, if you're trading SPY, I love playing mean reversion rejections off of the 5-minute is great. So that's the yellow line here. And yep, I took this trade this morning on QQQ. When VWAP is stacked with the 5-minute EMA, as a short or as a long spot, it's double confluence, Like look how tight these EMAs are stacked together. So when you're retesting the spot for a short, it works great. And on the flip, if you're retesting it for a long when they're close together like that, it works great for a long. So your 8 is really going to be help you for trend. And then the yellow line here, the 21, is really going to help you for your mean reversion plays. So that's going to be like when price looks like it's floating, right? When price is floating away and it comes back to that mean reversion, that's a good entry point, So I would say a general rule of thumb, if you're in a trade already, use 8 to help you ride trend. Or if you're looking for an entry, I like the 21 EMA a lot. Does that help?
Yeah. So what about the VWAP? Because I see you added VWAP.
Yeah.
Would you
know
use
what?
VWAP just for more for another confluence?
I use it as confluence and it's like a magnet. But Billy, I'm gonna pull up one of your places. I know you're a big fan.
Yeah,
of VWAP,
I actually have I have a really good example using moving average and VWAP. Go to ONFO.
ONFO.
Yeah.
Okay.
This was one I
charted when did I chart this?
yeah, I'm just
I drew one line. I didn't chart shit.
okay. I'm just looking at your setup versus
Yeah.
mine. What time frame is this?
This is a 5-minute chart.
Can you go to a 1-minute chart?
Yeah. What do you want me? What time? This morning at the open?
Go to, hold on one second. I think go
This is
to
8:30.
about 10 o'clock in the morning.
Boom. That was a good guess. 10 a.m. right here.
Right. So, okay. This right here is beautiful. So ONFO, just kind of going over this, right? If you kind of go to the left, Jay, so previous highs, I'm not looking at, the exact price action, but if you scroll to, is that 850? What is that? Like $1? I think it was like $1 what?
Where at the lows here at 10 or the high?
No. Scroll all the way to the left.
Like
yeah,
here?
right there. Yeah.
Oh,
What's the high of
8:50
that?
a.m. 8:50. Oh, my bad. So pre-market high here?
Yeah.
It was like 170, 169.
Right. Okay. So this was a level I kind of, told you guys $1.70, $1.80. Looking to clear that range for a potential 2+, which we did. We hit like 248 today. So in this example here, that was pre-market highs. We kind of flushed out at open. I can't see the exact numbers on Jay's chart, right? But you see that range of consolidation next.
Right here.
And then just if you go back a little bit at open, like you saw the flush off like 170, right there. Yeah, you flush at market open.
This range here?
No, I'm saying like the range before that, where you're kind of like between pre-market highs in that range, like
Okay.
just going through a play-by-play. So you sell off, you start consolidating, right? And in this action, you rip up above VWAP. So I always speak about having like a break of VWAP with volume is like a bullish
my bad,
indicator.
Billy. I thought you were talking about 10 a.m. You're talking about the rejection here.
I'm starting
Okay,
hold on.
Here.
I'm starting from start of the day to I'm just stepping outside.
8:50 a.m.
Being loud as hell inside, so I just stepped outside. My bad. But yeah, so we started at pre-market highs at $1.70. During the day, you flush, right? That big red candle, red engulfing but bearish candle, right? You flush out. We go below VWAP, and you go into this range of like consolidation at market open. Now, if you look at 9:30, you have that nice green breakout candle here, and you start breaking over VWAP. So whenever I say to look for entry, right, you want to see like massive, volume, and you want to see like a clear breakthrough VWAP, because VWAP either acts as like a natural support or resistance level. And in that case, you could see the stock started halting up, which Sam, I know you're in here, I think, but we could talk about halts like another class. But the price in this case started to halt up. So whenever you see like a strong kind of breakthrough VWAP, right, and you're looking for that pullback, this is what I want to kind of tie in with VWAP with like moving averages, right? So we broke through VWAP, which indicates a bullish trend, but you want to look for also a pullback on that bullish trend with the breakthrough.
To clarify, Billy, you're saying you didn't take an entry. You waited to see VWAP break through first, and you wait for a pullback to the EMA to get entry.
Exactly. So you're going to wait for that bullish breakthrough, and then you always want to see just confirmation of like that retest of VWAP. That's what we always say, confirmation, right? So you want to break through that price action, and then you want to see a back test. So you want to see that key level hold again.
And then this one, Billy, didn't test VWAP exactly, but you did have the 21 EMA crossover VWAP, and then you could play the mean for the bounce here, right?
Yeah, and with small caps and penny stocks, they're so volatile, right? So you're not going to get an exact touch most of the times like you're going to get on like an AMD or a Tesla, because those are just like all algo driven for the most part. And I would say small caps are more retail driven, just hype there, right? So in this case, we had a beautiful bounce off that, yellow moving average line, while also confirming the back test of VWAP. So this is like a perfect setup here, which is, I think I said $1.31, and then we were going to, bounce off that and retest to that 170, 180 range, which exactly it did. But as you can see here, you're in a range of consolidation, but every time that price sells off, what is it exactly doing, right? You're hugging that yellow moving average line, which means that there's that continued bullish momentum upwards. So if you keep going along, 10, 10, 10, 15, 10, 25, 10, 35, you keep seeing that price respect
And
that
then
moving average line.
you eventually got a VWAP. You eventually got a VWAP test too. So I think, Colin, the general rule of thumb, Billy, correct me if I'm wrong for how you're looking at it. Under VWAP, we're short-term bearish. What you're looking for is a reclaim of VWAP. You're not going to take your entry there. You're going to look after for that, for either a pull to VWAP or maybe one of these EMAs based off of reaction at one of these spots for your entry long. Right?
Okay.
Yeah, I think Jay said it beautifully. And like the thing is, right, why we say don't buy the breakout is because there's so many fake outs in the market, right? So what could happen is, market makers could, rip price through VWAP, and you'll see it many times in a lot of plays. Like I'll call out like, hey, we're testing VWAP here, are we testing VWAP there? I'm not saying buy, right? If you're breaking through, you have to make sure you clear that with volume, right? To make sure that that move is liquid. And then you have to back test that either, mean reversion line or VWAP just to confirm that that trend is there. So when you have that basing and then you bounce off that confirmation, you're in the money right there. So yeah, with the small caps, VWAP and like moving average, you combine those two and you have a really, solid setup there. As long as, liquidity is there and it's a high volume momentum play like I, call out every day.
Yeah. So Colin, I think for your day trades, if you use these three, and honestly,
and guys,
Colin,
and volume's huge on these breakouts. If we're breaking out of a trend, you have to, like Billy said, there's a lot of fake outs. So when you're looking at these breakouts, you like look at Hood. As soon as it broke the trend, the downtrend, look at the volume that came into Hood, and look at the parabolic move it made. That's why you want to buy into those expansion moves when you see volume. Volume's huge.
Yeah. So Colin, I would say I think for you, the 821 and VWAP for day trading are golden, right? Those are your EMAs you want to use. And honestly, I know you trade SPY a lot, but if you have time to wake up early tomorrow, paper trade and follow some of Billy's trades on the small caps. It's super helpful to track what he's doing and kind of get a feel for it, because even though these small caps are not SPY, like we always say, these strategies you could apply to any stock. But I think it's helpful when you're following someone else saying Billy's killing it with the small caps. You kind of back test what he's doing, get some insights of what he's doing, and kind of paper trade, follow, and you can apply that system to SPY or whatever it is you want to, or you start trading small caps yourself too. So
right.
Did I help you?
Is that does Billy do you do your call outs in your channel, or is it in the general channel? Because I kind of missed them in the morning.
Yeah, look under Billy's channel. So
so make sure alerts are on for the general rule of thumb. I'd say I know a ton of alerts come in. Shut off everything but our 3 channels.
Gotcha.
Yeah.
Yeah, sometimes I'll forward like my plays to the general chat if they're like taking off and going crazy. So I think it was WSHP. I called out like a 18 and change break for more, and we got $42 this morning. And I think Justin caught that one. A couple of the other guys, good execution there. But a prime example that you want to enter on the breakout and confirmation, right?
What play was that, Billy, on Monday when you were out? What play was that? Snail.
Yeah. Dude, and I just want to like kind of.
I thought snail was like verbiage for the longest time. I'm like, okay, stock market's moving snail.
It was actual small cap stock. I never trade it, but Colin, to like Billy's point and my point also, like I don't trade small caps at all. Billy was out. His daughter was born this week, and I just was helping out with giving some levels on small caps, and people made some good plays. So I'm not nearly as good as Billy, obviously, but I just followed levels, said, hey, we're under VWAP, look for a reclaim or something. The same things we're talking about, you could apply them to whatever you're in. You know what I mean? So it's worth taking a look at. And at least with that, you have his guidance to follow. He's giving you his levels in the morning. I don't mind posting charts in the morning for it too. I'm usually up pretty early, but you got to be up at least by 6:30 the latest. I would say we go by 6.
I'm up. Yeah, I'm up because normally I go to work at like 9:30, so I'll be up and I see the chat. It's just,
bro, you could be done before work starts. That's the best part with Billy.
Yeah, dude, we make insane money on pre-market moves. I think a lot of people sleep on it. I just want to caution though for you guys, like we are in a super hot small cap market. Like this is not the norm.
Yeah.
You know, we're not going to find 600, 1,000%, 2,000% plays like every day. You know, we're in a weird market where there's a lot of like macroeconomic events like impacting movement on the market. So, you know, like you got to like manage your risk very closely here, very tightly, and just make sure you're not chasing these, because just because the stock went up yesterday and made a massive move doesn't mean we're going to get a follow through on momentum today. So, you always have to protect capital.
You can look at the Russell 2000 right now. I mean, that thing's parabolic, bro. The small caps are going crazy. RUT.
No, I'm looking at futures index.
But yeah, you don't need to, like, guys, you could trade like you could trade 20K and make like 100K in like a few weeks doing these. Like, you don't need a lot.
You could trade $1,000 if you're smart with it. Justin, not to call you out, but seem like you've been sizing smaller and just getting your feel for the plays, and you've been doing really well, man. Like, you've been scaling in and scaling out. Sorry, John, I saw you had your hand up before, man. I don't want to skip over you again. John, you had a question?
Yeah, you can finish your point though if you were making a point.
No, that was really it. I was just saying, like, you don't need to start out with a huge amount of money for the small cap plays, you know. You could, I think you're actually doing yourself a disservice if you go in and try to start with a large amount of money, then you lose it. Then you have no money to trade. So start
also
with a smaller amount of money, you know?
Like, a big thing is, like, when you're starting off in this game, the most critical thing is to build yourself a cushion, right? You don't want to start this game off $10,000, $15,000 down, right? Because then you're going to feel the weight of the world on your shoulders. You know, start small, paper trade, put your pride to the side. Like, if you are not 100% sure what you're doing and have conviction, don't be trading like 10, 15,000 on my plays. Don't do it.
Don't even put 5,000, honestly, if you're not sure.
Yeah, like, sure, I can make, you know, 5K a day or whatever, but, you know, I've been doing this for almost a decade at this point, right? So I know how these things move, but the point is just work on building that cushion, work on building that conviction. If you guys stick with us and you really learn how to do this in the next year or two, you're going to be making 6-7 figures a year, like, guaranteed. You know, it's all about just putting the time in, though, going back testing our plays, going through our channels, asking questions. I mean,
and patience. Don't over trade. You guys, you don't have to trade every single. You want to be very confident in your plays. Every loss sets you back. So there's plenty of opportunities. You don't want to over trade. Some days when you're in a chop range, you know, you just sit back and watch, wait for an opportunity, you know.
Yeah, because to Brett's point, right? If you overtrade on that day and you're down 5K, guess what? You're gonna have to use the next day, 2, 3, 4, 5 days.
It's a lot of work
to make it back.
It's a lot of work to make it back. So,
you know, like, so you'd rather take 0 on a day than minus 5,000 any day. Like, or even if you take $1, right? You're green, right? It's better than being down and having to work out of that hole you dug.
John, my bad, bro. John, sorry, to you. Floor is yours.
You're good. You're good, bro. I had a question for Billy about ONFO.
Yeah, let's pull that back up.
When you were saying you would take entry off the first bounce back off of the VWAP, are you saying you would hold it through the next 2 retests of it until it crossed back under?
Jake, can you pull that chart up?
Yeah. So
yeah,
so this is the morning he's talking about. So we had the pre-market high Billy mentioned at 8:52 a.m. right around 170. This rejected. We lost VWAP. So short term price is bearish under here in this consolidation period, right? Short term price is bearish, right, Billy? That's what you're seeing.
Yeah, this is the beautiful markings, Jay. So then, as you see out of this range, you're breaking out of consolidation, right? And when you have a halt up after VWAP, halt ups tend to be very like bullish through major key breaks like VWAP here, right? So the price halted up. You see that gap in the chart slightly above Jay's arrow. And then you push up here. So what I'm saying is, I'm not saying buy that breakout. Sure, you can, but there's obviously risk that you could be faked out, and you know, you'll see like a wicked reversal off of that like level if it fails to like hold. But what I'm saying is be more patient.
Yeah, you were saying buy off the first bounce, right?
Yeah, so in this case, it would be about 10 o'clock in the morning. So you see that price action going right back to VWAP. You want to get as close of an entry as possible to VWAP off of a major move to the upside. So in this case, you went up, you halted up, and then you're seeing that retest of, that yellow moving average line. If you go to 10 AMJ on your chart and kind of just hover over that price.
Yeah.
Yeah, you see that.
Yeah.
Yep.
Right here, right?
Exactly. So you see that massive green candle right there at like 10:02, wherever that is, off of that yellow line. So not
21 EMA
only
right there.
Yeah. So not only are you bouncing off EMA, but you're also the price never had a chance to get to VWAP because there were so many bulls that were waiting to hop in on that pullback.
And here's also too, guys, this is why we say this stuff works at all time frames. You have your 8 and 21 crossover here, right? So all right, you were trending bearish here. You had the cross down. You were trending bearish here, right? Now you have your crossover. You're trending bullish short term. You get over VWAP, but you do not want to long direct into VWAP. Kind of like that example I was showing you guys on the hood. The first test of those EMAs, VWAP, usually do get rejected. This instance, it didn't, but why chance it? You got over it here, right? And like Billy said, now that you're over VWAP, okay, now I know price is trending bullish. We had the crossover the EMAs, we're over VWAP, price is trending bullish. Now you're
Fill the
thinking to
gap.
yourself, where do I find my entry? Okay, let's look and see. You don't just blindly long it. You're like, Billy, for you, you're like, all right, let's see how we react in 21 EMA. Positive reaction, bounce here, held here. Okay, you know what? I'll long it in this spot here. And look, you would have made some good money. You know?
See that? You have like a beautiful retest. You keep bouncing off that yellow EMA line. Look at it as a magnet,
and
right?
never
Price
broke,
bounce
Billy,
off,
either.
price bounces
it never
off.
broke. So you could have rolled
Never
this all the
broke.
way up. And then when it finally did break.
So you'd hold it through those bounces? You'd hold it through those bounces off the VWAP again?
As long
this
as
is the 21
that
EMA.
uptrend, as long as that uptrend structure holds, I recommend holding on to it. But listen, there's a different psychology to actually trading in the moment versus like doing things after the fact, right?
Yeah.
So if you see a bounce and you're in and you're up 10% and you feel like price action is going back down to retest, like take 10% and get back in if you get another bounce off the EMA.
Play the retest. You could have played the breakout here, took profit at 170. That was prior resistance, right?
And enter on a pullback to the moving average right there, and then just keep riding the wave.
Play it again here. Also too, John. This is I don't want you to confuse the two. This is the 21 EMA. The purple line's VWAP. All right. Just to call that out. Those two are different.
Okay, yeah.
Yeah, gotcha.
Oh, okay, I got you. Mine's yellow on my chart, so
you could set it whatever color you want. I like yellow for my line for that. Purple I've always used for VWAP. That's just how I learned to use it. I don't know why.
Okay. Now that makes a lot more sense.
Yeah, no, you're good.
So guys, like I think the most important thing is my plays could be in action in pre-market. And then what happens is the price kind of settles. You'll wait till the market opens, and then you're going to see how they all kind of trend throughout the day. Mm-hmm. So we've seen a lot of like 12 p.m. runners. We've seen like 2 o'clock runners. Sometimes they hold the price down all day, and then they decide to run it up. But when you see these things start happening, right, like strong breaks of VWAP with that, reclaiming VWAP and then getting the back test to make sure that VWAP holds, and then that price action upwards off that level. It could work any time of the day with any stock. But I like to, focus on 5 or 6 stocks throughout the day in the small cap market, which is probably more than, Jay or Brett will do. But
yeah,
I trade momentum, right? I'm not pumping up small caps or doing any of that stuff. I'm trading when it has volume and when there's liquidity to make a move and have a lot of like volatility throughout the day.
All right, guys, we spent.
Thank you. I appreciate going back to that stock.
No, you're good. So, guys, I know we could cover this literally for another hour because there's so much to talk about with the EMAs and they're super helpful identifying trends. But I have some other stuff I want to cover with you guys too. So we'll revisit this another time too. But thank you for all your questions. And Billy, Brett, thank you guys too for those inputs. We have a few more things to cover really quick. So I'm not going to take too much time on this. Drawing trend lines, I'll show you guys quick in a second, but it's really simple to do, right? So Brett, you love trend lines. I don't know, Brett, do you do 2 touch points for your trend lines? I look for 2 or 3 usually.
Right? I feel the most confident with 3, but obviously you have to have minimum 2.
I like 3
but
personally also.
The more the trend line touches, the more it gets respected over time. So
So all a trend line is exactly that. Trend lines are very simple, straightforward thing to draw. So let's go to daily time frame. We're gonna get rid of everything else on the chart. We're not gonna look at EMAs. We're just talking straight up trend lines now. The tide indicators. Okay. So a good trend line to draw is off a major low here. Like, so say a major low here was for tariff lows on SPY. So you're going to take your trend line tool here, draw up from the bottom of the wick. And so it depends how you're looking to draw your trend line here. So this could be like a 2-touch trend line here. You have, this is a really long-term trend line that you would use for tariff
Jay,
lows.
the stock chart's not up for me.
Oh crap, my bad,
yeah,
my bad.
Yeah, I don't see it either.
I'm not resharing, that's why. Hold on one second. Thanks, guys. I'm going to do that again. All right. So I think for trend lines, one thing you want to do is 2 ways to look at it. So I'm going to use Colin for an example because you mentioned SPY, right? And or playing things on a lower time frame. So say you're like, all right, I'm looking to trade SPY from the morning, or this morning we had some overnight lows around here. You take it from your lower wick here, and you have your trend here. You get 2 touches here, 3. We broke trend. You know, look, that's really simple as that. Trend broke here, right? This is a short time frame one. Look what happened when trend broke. And I didn't even do that intentionally. It just drew it to that point. Look what happened.
They work, guys. The trend lines work.
Even better, Colin, we were talking about this before too. If you have, I know for a fact, the 21 EMA is here, right? Boom, I knew it already. And VWAP is there. That's like quadruple confirmation. Why would you not short that if you're scalping? You know?
Yeah.
So that's why you use, these things are all part of a system. And when you start stacking things on top of each other, you see how you get added confluence, and it gives you more confidence in your plays to know that, okay, cool. Not only do I have the EMAs here, I have a trend line. I'm going to use AMD for an example too, because Brett, you longed AMD off of the 200 day. Let me get rid of this volume thing. Let's get rid of this line here. We'll get rid of our EMAs. So you can use, so there's ways to do this. So for a higher time frame, I like using major points because those are like major inflection points in the market. Like say here, the tariff lows in the market, this is a major inflection point where we had a big reversal, right? So people sometimes revert back to COVID lows. That's a major inflection point in the market. But like say this spot here, and obviously it's probably gonna take a while till we retest this trend line here. But if we have from tariff lows, you know this is our trend line from tariff lows. So when we come back down here, it's very likely we retest this. And again, I bet you the 200 day is here too.
Do something recent like HIMS, like the recent downtrend on HIMS, and I'll show them.
Yeah, for sure. But like, look, the 200 day was here when a tariff low line. Like what other confluence would you need? The 200 day and the line from tariff lows, your lower trend line. But really, like 2 to 3 touches on your trend line is all you need. And again, it depends how you're trading it. And the same concept, you need to use higher time frame and lower time frame. If you're looking to add for a swing, you're going to use higher time frame for this. HIMS, Brett?
Yeah, HIMS. Do like a 1 year, like a daily chart.
And my bad, guys, too. You obviously have a, when the hell did I chart HIMS? 1 year?
Yeah.
Yeah. So like HIMS, for example, I like to use major inflection points like all-time high. This is all-time high. Is this all-time high for HIMS? I think so, right? 70. Let me see. Yeah. This is all-time high right here, 73. We could do yearly highs, highs in the year. You come from here, or Brett, I don't know, where'd you go for?
No,
this?
I do from the other candle.
This one here, right? Yeah.
The green candle right there.
Yeah.
So draw a trend line.
Break. Yeah.
Yeah.
Like you could say this is a downtrend break here, or you can even say this is your downtrend break here. I like this better.
That's how I traded that stock. That's straight up. When I saw the trend break on that, I was like, buyers are coming in. And then once you saw the volume, things squeezed, 17% same day.
Yep. So guys, you have upward trend lines and lower trend lines. So obviously you're using your lower trend line to track an uptrend, and your upper trend line is to track a downtrend. HIMS was clearly trending down here from the highs from October 25th. You could clearly see Brett saw this got rejected here in March. Okay, let me draw my trend line here. Now you have 1, 2, 3 touches here, right?
And so where's your touch on the bottom half right there? My entry was 2103, so I got right in before that thing squeezed.
Yeah, you came right into this. So you kind of like Also, too, this guys. So this is why I use the system. Is look. So you had the 8 crossing a 21, and the positive convergence on your EMAs here, right? While you're testing a upper trend line, right? So not only are we moving up trend wise for your positive stack on your EMAs, but we're also breaking out of a downtrend line.
Exactly.
You know, so this is why I said, like, we're calling this a foundational course and doing parts to it, because everything adds up to the full picture. Like, you can't use a trend. I mean, I know people do trade trend lines only. I think it's silly to only use that in itself. But you add trend lines, you add your EMAs, you add support and resistance. You got a full system you can work with, you know? And literally, like Brett said, Brett, you didn't do anything special. No one told you to buy HIMS. No one said, hey, HIMS is going to have.
I looked at the chart for an hour, draw trend lines. I looked at every indicator, all my candles, every EMAs, and made a decision on that. You know, I had a price point where I wanted to buy it, and look what it did. Look what it did within a week.
The 50-day was here too. So yeah, like it reclaimed the 50-day, the 21 EMA. Yeah, your positive convergence here over those shorter time frame EMAs, and you broke out of your downtrend. Like, that's pretty damn good.
Win.
Yeah, exactly. Does that make sense?
Those are the trades, guys. These are the trade opportunities that you want to find. You don't want to be playing with range bound stocks, trades that are not setting up. You need a win. You need to see everything and be like, okay, everything on this stock is bullish. You know, it's not
the
one thing.
Trifecta right there. That's the trifecta. You have triple confirmation. Does that make sense to you guys?
It does make sense. I think I'm going to get burned one day, naturally, right? There's winners and losers, because I'm going to look that we're below the 200-day, that red line, and I'm going to be like, oh, this is a great buying opportunity. I know it's going to get me.
Well, no. Well, okay, so Dave, let's backtrack. Under the 200-day means you're bearish, right?
Yes.
Short term, higher time frame, macro time frame. Like, you have to look at it this way. If we're under the higher time frame, like this is your think about this, your holy grail right here. This is your macro picture. You could buy under here and make money, but from a big picture over the last 200 days, thinking of it that way, we're bearish on HIMS, right? Once we're trading under it. But look what happened when we broke it. Price kept going down once we broke it, right?
Yeah.
Right.
But now we're out of the trend, but now that's going to act as a magnet. So now there's a good chance that that stock goes to that red line right there. Very good chance. I'd say 90% chance eventually. So you're looking at more upside on HIMS at 100%. Just a matter of, it could retest that breakout. You know, if the market, it depends on the indexes. It really, you know, all these stocks will follow the indexes.
So Dave, I'm not saying don't buy under the 200-day. I'm saying just realize big picture. If we're under the 200-day, we are bearish. But you want to look at your smaller moving averages to tell you where we're going next. Does that make sense? So like you look for a reclaim of like the 8 and 21, like you got over here, you break out of a downtrend, and then you're getting long. Does that make sense?
And that makes sense.
Okay, gotcha. All right, cool. I'm not gonna spend too much time on this. I know we covered a lot. Well, we still have more to cover. I'm gonna be really quick on other ones. Trend lines are pretty straightforward, but use it as a tool as part of the system. That's the main part there. I really want to make sure we didn't even need to look at this because we said it. This is kind of like your checklist. And if you guys want, I could send this deck out to you guys too. This is your checklist, right? You're going to start higher time frame. Check your daily and your weekly chart, right? Look at this as before looking at the 5-minute chart, open it daily. I didn't type that in, by the way. Claude made this for me. But we're talking about the same things because it's a super important principle you use. Start higher time frame, then you work lower. Next, identify the EMA stack order. Like I said, lower to higher time frame, 8, 21, 50, 200, all stacked, price above, bull trend like we looked at with AMD. Positive stack. Confirm the price structure. Are we making higher high, HH, higher high, higher low, uptrend? So you want to see those candles making higher highs and higher lows. They'll be going this way, up. Right? Find the nearest trend line, support and resistance level, / that. So you use both of those things. That's what Brett did to find the HIMS play, right? That was his nearest trend line. He found that marked the closest key level in the current trend. That's why Brett, when he called out, used the other trend line, the other candle he used to do the downtrend line. That's why you got that clean break of that, and it was easier to draw that trend line, right?
Yep.
Align
And
entry with
all these traders are looking at the same thing. Everyone's looking at the same trend lines. That's why you see parabolic movement volume, because you got all these traders coming in. Even institutions look at this stuff. It's very systematic, guys. There's patterns on patterns on patterns.
Exactly. You know? Exactly. And then here, I love that Claude knows what we're going to say, because we spoke about this before. Align entry with lower time frame pullback. Like I said before, you cannot enter AMD. Say, like I said, you want to pull back to the daily 80 EMA. You can't enter that trade on a daily chart. You have to know that level is there on a daily, from a daily time frame. You're going to enter that maybe on a 5 or 15-minute chart, right? That's where you find your confirmation. You wait for your price to pull back to that level. If it was 230 to whatever it is, 250, whatever it is, and you're looking at the reaction on a 5-minute chart, not a daily chart. The reason you're not going to buy it on a daily chart, because the freaking candle doesn't take all day to close. You're not going to see the reaction happen until the candle closes at the end of the day at 4:30 or 4 o'clock, right? So next, check volume, like Brett spoke about too, with hood, HIMS, the explosive moving volume come next. Those kind of confirm your direction. And the big piece we're missing that we didn't get to cover yet is VIX context. I'm going to go through that super quick. Not going to go through that right now. We kind of talked about this, the bounce. We'll revisit that in a second. Damn, we spent a lot of time on here. It's almost an hour and a half. We'll come back to some of these. I do want to touch on the VIX for you guys, because I've been talking about it a lot. So a lot of people don't know what the VIX is. If you don't know what the VIX is, so the VIX is a ticker, right? The VIX is the volatility index, right? So it's literally, that's the name of the ticker, VIX. Go find your chart now. The VIX was created, I looked this up. It was created in 1993. Pretty much the reason it was created is the market needed a way to measure expected market volatility, right? So kind of, you know how we have the fear and greed index indicator? The VIX is the real fear and greed index indicator, right? So when the VIX is elevated, the VIX is almost an inverse to the S&P 500. So if the VIX is high, the S&P is likely trending down. So the VIX has certain levels it operates off of, and that's why today I was talking about, hey, the VIX is in demand zone. The VIX might bounce. If the VIX bounces, the market will go down generally, right? So the times the VIX has been the highest, if you look at the VIX during the COVID spike, the VIX went crazy. If you look at it during the tariff news, the VIX went crazy. If you look at it during the 2008 financial crisis, the VIX went crazy. That's because the market has an elevated fear. So when the VIX is higher, the fear gauge is higher. So when the market's panicking, pretty much the investors are buying puts or taking hedges for protection. Or they could buy the VIX too. If you want to hedge your portfolio, you could buy VIX shares. You know, that's a great way to hedge as well if you want to. Or there's UVIX, which is a 2x leverage version of the VIX. That acts as a hedge or a way to show market volatility. When the VIX is very low, the market moves very choppy and kind of, you don't get those, pretty much the market moves a little calmer. When the VIX is super high, you get extremely volatile moves. You get massive candles, especially on the major indexes like the NASDAQ and the S&P 500. You'll see big candles. So when the VIX is super high, that's kind of the time you want to be looking to buy long-term plays, honestly. When the VIX is super low, you could swing out trades at an easier standpoint. You could sleep at night. Like say last year around this time when Trump was talking tariffs, you couldn't really leave that many positions overnight, but you didn't know what was going to happen in the morning because the VIX was high. Yes, Trump was yapping, but at the end of the day, we're talking straight technicals. I don't care who's president. I don't care if it's Obama, Trump, whoever it is. The VIX is always going to be there. The president changes every 4 years, right? The VIX is the same thing no matter what. It goes through periods of elevation and periods of when it's suppressed. So it's key to know that.
When you guys see the VIX over 30, that's when I usually just buy as much stock as I can. You could pretty much buy anything in the market and make money on it. If you get a VIX over 40, I would try to take out any loan, any amount of money you can, and literally put it in the market, because we know the VIX is going to get crushed eventually. VIX does not stay at 40. And I bet my life on it. It doesn't, you know.
I'll show you guys an example. Brett, that was a good point you called out too. You said over 30. Like I didn't even go through the slide yet, and Brett said it. Over 30. Look, over 30, high fear, like Brett just said. You know, Brett, sorry, go ahead.
Yeah, so like when I believe when Palantir was $7, I think the VIX was at 40. It was very high, the VIX. But I put every single dollar I could, because you don't get a lot of opportunities of the market, the VIX going to 40. I'm telling you right now, it's probably once every 10 years you get that
Right here.
opportunity.
VIX over, what's this? I don't know how to read.
Oh yeah, there you go. There you go. I didn't even see that.
Yeah. I don't know what this chart's saying though. Oh, is that saying 6 times? Bro, what the hell?
85.
I don't know. This
Yeah, it's
chart's
a weird
retarded.
chart.
Yeah, this
Oh wait,
chart's
the VIX.
stupid.
I think the VIX did. Let me see.
This is the VIX price right here, clearly. Oh, is this? No, I said, oh, like I knew what's going on here. I have no clue.
Yeah, the VIX. No. The VIX did hit 85 at one point. I think that's what it's saying.
Oh, my bad. I think this is saying the fear level. It hit. I still don't know what this chart's saying. Chart's thing. This is what happens.
All right,
every time you
back to my point.
If
the VIX goes over 40, I'm looking at it right here. I mean, last time the VIX hit.
We'll look at it ourselves.
Okay.
We won't rely on Claude's chart because that was retarded. Bro, I didn't know what the hell that thing was saying. I'm like, wait, what? I'm gonna hide my levels here. Also, too, one thing I want to call out, guys. Some people say technical analysis and work on the VIX. Don't listen to them. They don't know what they're talking about. Levels work on the VIX also. Look.
Yeah, they definitely do.
Look, a supply zone here. The VIX rejected that. We went pretty high at 35. That was a great buying opportunity, right? At 28, we rejected multiple times. 19 rejected today, but this is today I was talking about, hey, we're in a demand zone here in the VIX. We're bouncing.
And look at the giant gap above. VIX is going to bounce soon, guys.
It's retesting its demand here, and it's around 17 or whatever, and it's going into the weekend after 13 days of the market being green. Trump's magically going to have something to say.
It's going to happen
over the weekend. But look, let's look at a daily chart in the VIX. Let's hide the levels. Let's hide everything. Hide all. Without using anything. The VIX looks crazy because it's literally almost like a heartbeat of the market, right? When it's really high, there's more panic. This is high, not that high. We're at 35. This, I could just look without going to the date and tell you this was tariff. This is crazy. VIX went to 60, right? But when you have those massive VIX spikes like Brett was saying, sure, it played out for a few days, but eventually it gets crushed, right? But here's the thing, guys. The market is inherently designed to be bullish. The stock market was not designed to be bearish and not make money. The stock market was designed to make money, right? So eventually, when these major spikes happen, they're going to sell off. So
do a longer time frame. Do a longer time frame. So
let's do 5-year.
So over 40 obviously does not happen often, but that's something we like when people are selling.
Yeah, that's when you want to buy because everything is going to be bloody red. I mean, you're going to get crazy discounts. I bought Palantir at $7 a share and I put a lot of money in it. You get opportunities like that where you're like, what is this company going bankrupt? You actually question if these companies are going bankrupt because they're trends. That's a macroeconomic condition. So that when that happens, everything in the market, doesn't matter what it is. It could be a product that will cure cancer. That it doesn't matter. It's going to go down.
Yeah. So Dave, look at it this way: when the VIX is high, it means there's fear in the market, right? Mm-hmm. Do you want to be buying, say SMH? You got SMH, right? Mm-hmm. Let's go to this. This is. Oh, this was the carry trade, I think, right? August 24th. Yeah, that was the carry trade. In Japan, the yen trade. I'll tell you guys about another time. But that was a big day of market volatility. The VIX came to $66 that day. Those days, Dave, are going to be the cheapest you're going to buy a stock when there's extreme fear in the market, right? Those are the days you'll be very liquid for. Say here, these are the days you want to buy. February 2020, COVID. Look how high the VIX was, $87. And when people say, "Oh, I wish I got,"
you get rich.
COVID prices.
You get rich. If you have the VIX over $80, you will get rich buying stock. I promise.
I wish I knew about the market back then. I didn't know about the market back then. I wasn't trading him. But I can tell you this. Look, zoom out. How many times did it hit $86? Other time, 2008, right? This happens in major windfalls in the market.
Black swan events.
Exactly. So things you'll see once in a lifetime, maybe once every decade. Our one recent one was really the high we had was with Trump and whatchamacallit. Sorry, that was not a daily chart with the tariffs, right? And this is the carry trade. I'll tell you guys about that another time. If you guys don't know what that is, pretty much the yen failed. There's a pretty much it's complicated, but that was a carry trade. You guys can look it up. I'll drop a link about it in the chat. But when you have these really elevated periods in the market of the VIX, that's when you're going to see. So let's look. This is April 4th. VIX was at $60. We'll pull a side-by-side chart. We'll pull up. Let's do SMH. Dave, you like SMH, right?
Mm-hmm.
What did I say? This is April 4th, 2025. I didn't even have to look that far. Look at SMH price April 4th, 2025. $169. That's why you want to be buying when the VIX is elevated. So especially if you're a long-term investor, even if you're a day trader or a short-term swing trader, like if you load up options on these kind of days, I forgot what play. I think one of our friends is here. Oh, Mastretta was at here. And I traded like a spot QQQ option on one of these days. And dude, in like a few minutes, it's like a 400% play because the VIX was so elevated. And we were at a point where I'm like, all right, like the bounce trade setting up. You know what I mean? It was a scalp. But these like long-term investing, these are where you want to load up when the VIX has these days like this. Not when the VIX is at its lows. I mean, but when the VIX is at its lows, you could like these when you add your swing trades, your dip buys to daily EMA. You could sleep at night, let your positions ride out, and you're good, right? But as far as your long-term positions, like Brett, like Palantir at $7. Let's see.
Yeah, it's life-changing events when you buy the VIX that elevated.
This was,
and I put a couple $100,000 in. You know, I went heavy. I put every dollar I had in when I saw that. So next time you see the VIX that high, I promise you put your whole savings in the market, and you will be a wealthy man. You know, it might take another 10 years until you get that opportunity, but it will come again.
Look, August 24, this is the carry trade scenario. Palantir was at, and this is not even that long ago. This is just a year and a half ago. I remember this day. You know, Palantir was $21.58. The VIX was at $60. That doesn't happen often either. Like 30 to 40 for the VIX is kind of normal. You know, when you have like
we just got 30. We were just at 30. We're at 17 right now.
Yeah,
we were just at 30. So,
and if you were buying at 35, like those plays like Hood and Google when I said 270 and Brett AMD into the $200 mark, when you're buying at those spots, that's when you're making your money. You know, so I think the VIX is another tool using your tool set to get an overall gauge of where the market is at. That's how you're using the VIX. It's not meant to scare you. It's meant to guide you the right way.
And I'd say most people can't capitalize on those VIX events because they go too heavy into positions before the market crashes.
Mm-hmm.
You know,
and when the VIX don't know what the VIX is.
I do that all the time, guys. That's like the one. I mean, I was gonna join this group. You guys could have been talking about NASCAR. I don't even know, but I was gonna join regardless. But the one thing the biggest reason I joined is because I was holding SMH. Thankfully, to Jay put me on like for a year now. So thank God I made money. But my fear was it was going to come back down eventually. So I'm always 100%. What do you call this, Jay? Full prod?
Full port.
Full port. I'm always full ported in. I get like greedy. So,
So for shares on a high conviction play, Brett, you probably agree with me. I don't think it's a bad move. On a high conviction
definitely not. You're talking about semiconductor sector, which is the strongest sector of the market.
If then you full ported beyond meat or some shit like that, then I would say you're an idiot.
But then again, Dave, you know, look at relatively the chart. You know, it could squeeze higher. SMH. I could be wrong. It could go away parabolic, but you're so expanded already on the move. You have to take profit up here. You know, there's other sectors that are beaten down that you could be buying bottom barrel prices right now. You know,
Yeah.
you have to rotate your money
because that's what the market does. Like market makers aren't going to make money in SMH now because the price is so high. Who's buying up here? No one's really buying up here. So for you to make money on your stock right now, Dave, on SMH, someone else, not a person, an institution has to come and buy more of that stock, right? No one's buying up here. That's the only way a stock's going to go up in price. You're going to make money. So that's how you have to think about it. When you're at these high prices, that's why you take profit into these levels. I'm going to close out with this thing here. I don't really agree with this. I think this is for trading. This is for trading, not for swinging, like longer term. VIX above 30. If you are day trading and scalping, I do agree with this. Reduce your size for day trades. You don't want to be heavy in day trades when the VIX is above 30. You get a lot of fake outs and you could lose a lot of money. So I do say, I think the biggest thing is that the VIX is breaking out. This is risk off. Risk off means to chill, you know, step to sidelines pretty much. Even this, I don't agree with. I think you want to be taking your hedges when the VIX is low, you know, not when the VIX is at over 30. Why would you take a hedge when it's already over 30? You missed the hedge move. I want to make money on my hedges. That's the point of a hedge, to make money on it. So
yeah, you gotta be before the move, not after the move.
Yeah, if you buy buying a hedge when the VIX is at 30 is equivalent to buying SMH right now.
You guys are wondering why I'm hedging with my energy plays and the markets just keep squeezing and squeezing. You know, I'm trying to DCA my position where I'm ahead of the move. I shorted the market before it happened. You know, I'm always doing stuff before it happens.
That's the way you make money. Otherwise, if you're buying hedges on a downtrend when the trend's already down, you're not making money. Or I don't know if you guys remember a few days ago when Brett and I were like, yo, take some hedges, SOXS or oil, anything of that nature. If you're buying that when the market on the rally days, you're going to make money when the market comes back down, right? And that's how you hedge yourself against the downside moves in a market. But I know we covered a lot. Damn, we were on here for an hour and 40 minutes.
And Dave, compare the charts. Go on your charts and look up SMH compared to IGV and do some research. I would definitely reallocate your money into a different sector like IGV.
Dave, you sold those IGV shares I made you buy.
I think so. I have option shares. I don't even know how to sell.
Nah, hold on to those. Those are leap calls. Hold on to that. Those are going to be in the money.
I got to get TradingView. I don't have whatever y'all's charts. I don't have that.
Okay. Actually, Robinhood has a lot better. Brett, did you see Robinhood? They fixed their charting.
Yeah, no, they're not bad.
No, they look pretty good now.
They're very interactive.
Days that y'all mentioned on here.
I know we covered a lot, guys, and we were on here for a while. I don't want to keep anyone too much longer. Does anyone have any questions? I'll do a quick 10 minutes of Q&A. I think the biggest thing for me was, and Brett and I wanted to cover, was overall market trends, how to use the EMAs or your moving averages, and how to incorporate that into your trading system. And the VIX is another tool you use in conjunction with these things as well. But anyone have any questions?
Is this recording gonna be somewhere in the Discord to watch again?
Yes, sir. I'm gonna post a YouTube link for it.
Gotcha.
For sure. Anyone have any questions about anything we covered? Anything in general about the Discord itself? So guys, this is only we're wrapping up our third week. The community is growing a lot, so we really appreciate you guys being active and talking in the community, asking questions. That's what we're here for. We want you guys to ask questions. We want you to learn. There's no such thing as a stupid question. If you don't ask questions, you won't learn. So continue to ask questions. This is the time to ask questions as well, if anyone has any. All right, y'all. I know people asked questions before. If no one has any questions, I'm going to wrap this up. I'm going to stop the recording here. I appreciate all you guys joining. We'll be back on it tomorrow. Oh, also, if you guys have anyone who wants to join the group, Sunday is the last day that anyone can join and get a month free. That's done. We're cutting that out. Y'all got too much free info. But no, seriously. Yeah, seriously. We wanted to give you guys a month free to see what we're about, to see what kind of value we offer. not to sound cocky or conceited, between me, Brett, and Billy, I don't think any other group is doing what we're doing. No one's getting on a live on a Thursday night, going over the market with you guys for an hour and 40 minutes, hand holding through trades. No one's doing these things that I've seen. At least I've been part of other Discord communities. So
and guys, I mean, the amount of plays that have hit since the beginning of this group is just
Crazy.
unreal. I mean,
crazy.
we're probably getting close to triple digits now on our plays. You know, so
insane. Like I'm honestly having a hard time finding Brett. It's hard to manage what to post on social media. At first, we were like, oh, Billy would post your small caps only, and then all the plays we were talking about that we were outlining when the market was down have been on absolute fire. Every single play has been hitting. There hasn't been a miss, you know.
And they're hitting our targets. You know, our levels are not lying, guys. You know, the charts
it's not
are
random
lying,
stuff. We're not just saying, oh, buy Google. Like, no, this is what you're looking for at these levels, you know. So it's been really awesome to see, and it's great to see everyone's making money too. That's the best part. People are learning strategy. People are taking trades in their own. It's a great thing to see. So I'm really happy with how things have been going with you guys, and we're here to help y'all. Please feel free to ask questions, and let's keep making money and keep learning.
Good job, James. All right, I'll see you guys later. Have a good night, man.
All right, guys. Have a good night. Thank you. Appreciate y'all. Peace.
Have a good night.
Later.